Ruchir Sharma is saying China is investable again. The reason you say it is really fascinating because China is now cheap and attractive for investment. Look at the price earning ratios. That's the cost of stocks and shares. In China, it is 10 compared to India and the US, which are 23 and 22. I mean, they're half as expensive. We are twice as expensive as them.
So let's make a couple of points here. One, I remain structurally bearish on the Chinese economy, right? So which is the fact that because of the debt and demographic factor that we spoke about, those haven't been resolved. So I still expect those to be a headwind. The demographics is terrible. And all I'm trying to say is that it's still the world's second largest economy. It's still the world's second largest stock market. If you look at China, Hong Kong combined, it's still very large. And there are some companies there you can find, what we call diamonds in the rough. But I'm saying that if you objectively look at China today and you look at some of the companies in China, they are doing relatively okay. They have some cutting edge technology.
There's one company that you pointed out which is just an eye-opener for me, and that's BYD. That's basically you're saying China is investable and some Chinese companies are very undervalued. BYD is electrical vehicle company just like Tesla. Yes. China's Tesla. And look at what you pointed out. The number of cars they've sold is 4 million compared to Tesla's 1.8 million. Their market value is 100 billion and Tesla's 1.2 trillion. That's 12 times higher and they're not even selling the same number of cars. And look at the price earnings ratio. 15 for BYD and 120 for Tesla. This really makes it, makes it very investable.